Hey traders from around the world, what's going on? It's me, your boy, Jeremy Alexander Newsome with the one, the only reallifetrading.com. Hope you're doing absolutely fantastical. It is Wednesday today. Unbelievable. It's already the 8th of February. Time is flying. It's amazing. I'm loving it and I'm pumped up. So let's talk about the SPY today. Got two things to update, very small. So back on the 3rd of February, which seems like forever ago, but it was right here. I mentioned I expect this retest gap to fill or retest, and really it's exactly what today was. All right, so white candle gapping up, a few days of sideways movement into the 10, and just bounced nicely off that. So SPY doing this thing. My buddy Fred in a 229, 228.50 bull put spread expiring next Friday. So that particular trade, he'll likely be exiting it if SPY really does bounce, and of course take out the all-time high. My good buddy Matt DeLong had a 232 covered call expire today. Matt, good job on that one. I appreciate. Good to know. Thanks for filling me in. So still got the 232.72 target, 233.72. I'm sorry, on the SPY. Quarter one or quarter two. Mentioned probably quarter two on the SPY. So that's still just hanging out, doing its thing. Nothing too crazy going on. The Qs, crazy as it sounds, did make another all-time high today. So another all-time high on the Qs. Here's your weekly chart. So you got 1, 2, 3, 4, 5, 6 white candles in a row on a weekly chart. So this is when likely a lot of people will start hopping on bullish. This is probably a really good time to start locking in some gains on at least the Qs or whatever tech stock you might be trading. I mean, it's really, really strong. Very, very up there. The trend is definitely bullish. And just simply waiting for something like this again to come in off of a moving average, right? So we've already bounced off the 10 3 separate occasions. The next bounce, more than likely, will be off the 20. And I'm not saying it's going to happen tomorrow. I'm not saying the market's going to crash. I'm still one of the few perma bulls out there who actively trades the market. But for right now, I'm just simply saying if you're not in bullish on the Qs, probably not the best time to get in right now is all I'm just trying to say. Here's the Dow Jones ETF, ticker symbol DIA. We're just kind of hanging out. Made another all-time high yesterday, but a lot of people hopped on bullish, trying to buy the breakout, and we just kind of pulled back a lot today. A lot of the financials and the Dow stocks pulled back today. Wells Fargo pulled back pretty bearish. So we had a bull put spread on Wells Fargo, closed that one on this day, which was the 3rd of February. A little bit of a bearish candle today. Speaking of financial stocks, I did day trade Visa today for 1.3 Rs. So you'll notice Visa had itself a nice little pennant pattern over the last few days and then broke out of that pennant pattern today. So the way we trade this one, I felt like we traded this one really about as good as you could have, honestly. We got in bearish right here with a stop right there and exited a bunch of our positions right around there. And then got trailed out for the rest of the positions right there. So honestly, played that one about as good as I possibly could have. Granted, I could have maybe exited down here for a little bit more, but either way, Visa, nice 1.3R gain. The big gap of the day, well, there's actually a lot of them, but GILD, that was the one that was most popular. We started talking about this one yesterday during Tech Giant Tuesday in the afternoon, and my analysis overall was, hey, very bearish gap, especially if it opens below 69.53. It did so today. My objective this morning, right before I went and meet with some real estate people, real estate attorneys, is my goal and objective was to buy the $66 put expiring this week, $66, because the $65.83 was kind of the target. So I figured if it was a little bit out the money, I could buy it for cheaper with a 50-cent limit with no stop on it. So 50-cent limit, and the stop would be 0, expiring this week, and target to sell is $1. So that's kind of my play on that one. That trade did work out decently well, 0.97R on GILD. So overall today, day trade was a good day, a little bit over a 2R day, which is, I shouldn't say rare, but it's felt rare, at least the last 3 weeks. So 2.07R on the day, so far 2.39 for the month, and that is just on the day trading spectrum. So that's GILD. Let's go look at Apple and ticker symbol AAPL. Apple, my target on this one, 132.86. There's more traders than I can count right now who are in some longer term options, either March or June. So March and June, rocking and rolling right now, slowly creeping higher. 132.86. So I was uncomfortable in this position on this day. So really just kind of holding through that uncomfortableness, trying to grow, right? Trying to grow that muscle of being able to hold a winning trade. So 132.86, that's going to be my target. And from that point, I'm expecting something like this to come in. Doesn't mean that's going to, but just that's what I'll be watching for and keeping an eye out for on Apple. But again, if you got a chance to buy these 320 calls, March 120 calls for $33.20 back on the 17th of January, those have almost quadrupled, 400% return on that move on Apple. So a lot of traders very, very happy. A lot of traders very happy. Heard it here first. Here's Chipotle, ticker symbol CMG. Not really doing that much, honestly. Actually, if I zoom out of here on CMG, you'll see a really big looking, I shouldn't say too big, but you're going to see a little bit of a triangle of some kind of forming and building its pressure here. So we kind of keep an eye on that one on CMG, watching for a potential breakout. Here's Disney, DIS, and Disney did have earnings. Initially, it was supposed to be gapping down on earnings, but doesn't look like it's going to do so. On a weekly chart, here's exactly what I would love for Disney to do. So big double bottom type of pattern, broke above a resistance. I would love Disney to pull back into this level about 105. I think that'd be a great buying opportunity. So that's just kind of my plan and objective for Disney. My good friend Stan has a 108 put sale expiring this Friday on Disney, and we'll all be watching that one pretty closely together. So that's ticker symbol DIS. And then PNRA, a lot of traders know I love this particular stock long-term. PNRA, beautiful bullish gap today, 8% up on the day. Huge candle, huge gap, closing at an all-time high. Here's what the weekly chart looks like. So very, very massive, massive move. So my expectation for this 230 covered call, if I get called away, fantastic. Likely though, kind of expecting, it was a terrible drawing, likely expecting PNRA to potentially pull back a little bit next week, hopefully closing below that 230 price, keeping the position, and likely one could just sell a longer term 240 or something, April covered call maybe. But again, up here on PNRA, all-time highs, never been higher. Very, very good breakout. Interesting to see what this particular stock does, but realistically at 230, really in the last 2 years, I mean, it's growing over almost 100 points. Down here at 147 back in 2014 when it came into some of these really good supports. So PNRA doing well, doing its thing, making some moves, making magic happen. All-time high, hugely strong gap. Very interesting to see what happens from here. A lot of energy's moving today, but really not as bearish as a lot of people think. British Petroleum gapping down. Down here at 34. Really a strong support on BP is about 32. So looking to buy the dip on BP, rig pulling back as well, potentially looking to buy low, sell high on this one, but I like the candle today on RIG. And then FCX, we got triggered into bearish today on FCX. We'll see if that continues lower on FCX. And last but not least, here's Alibaba. Just want to kind of wrap up the day talking about this particular trade. So with the weekly options newsletter, I'm sure a lot of you are familiar with that overall product in itself. What's fantastic about this weekly options newsletter product, to kind of give you an idea of, let's use an analogy from kindergarten, right? Remember in kindergarten, you would get those paintings, that's not the right word, pictures, they're drawings of like an elephant or something, and you'd have to kind of color in the lines. So when I create a weekly options newsletter, my objective is to kind of give you all my plan, what my plan looks like, the exact specifications of my plan, the time, the dates, the prices, the chart, everything. So once you have that, then you can kind of start filling the lines with your own version of how you want it to look. Maybe you make some changes, maybe you add some things, maybe you tweak some things, maybe you do it cheaper, maybe you do it more expensive, or maybe just do a whole different strategy, right? Maybe instead of coloring an elephant, maybe you're going to color a horse, right? Maybe you ask for the horse printout. Because there were some traders, even though I had an option set up on BABA, there were some traders who did shares, there were some traders who did put sales. There were some traders who had shares and said, oh, Jeremy's bullish, I'm going to continue to hang on Alibaba. Looks good, right? So again, just keep that in mind. It's all about our plans, all about us as traders staying consistent, staying disciplined, losing small when we do lose, not doing anything too crazy, and just sticking to the path of what makes a realistic professional trader consistently profitable, and that's losing small, planning the trade in advance. So Baba, beautiful move. Myself and a few other traders did get stopped out on Monday by like 0.8 cents on the actual option trade. But then some traders, again, had a little bit of a different setup than I did. Some traders used the actual stock price for the option trade. Our stop on the stock price was way down here. So either way, Baba, nice candle, nice move, nice gap, bullish trend. Next target on Baba, well, obviously is this resistance here about 104 and some change. But from that, I could see it trading up to about 109 and kind of pausing around there late February, early March, and then ultimately 117 on the year. So here's your weekly chart. Looks good. Interested to see what happens on Baba. A lot of good stuff, a lot of good movement. Incredible, incredible bullish market. I'm super excited about this. Figuring out and trying to determine exactly how high we will go. But realistically, I don't foresee or can determine any strong sentiment for any kind of bearishness, at least in the next year or two, on a primary level for the market. Sure, we'll get 4 to 5% pullbacks here and there potentially over the next 1 to 2 years, but until 2019, that's really about the time that I'll kind of start contemplating some potential bearishness. But looking for on a long-term perspective, if I just hide all my drawings here for a second, turn off the moving averages, go over here to a line chart, probably looking at something like this. So we got a 1, 2, 3, 4, and this wave 5 I think does get bigger than it is now. Wave 5 probably will be at least the size of this, which would kind of have us coming up into like 250, 260 on the SPY. Once we get a little bit more of a correction, 10% cycle, something like that. Something like this. And so as I have that drawn right there, that brings us into about March 2019. So we'll see, right? Who knows? But I will just simply let you know, going into the into this year, into next year, primary trend, I'm bullish unless something massive changes. What do I need to be bearish on the market? We're going to need to take out this pivot for sure at 208.15. Until we do that, I'm not going to remotely consider us being bearish. And then from there, I mean, we have to do something with this 187 level as well, so in order for me to start really getting bearish. So until that happens, I mean, I'll just be looking to buy the dip, right? So if we do something like this, I'll buy the dip. We do something like this. Hey guys, let's buy the dip again, right? And if we continue to do that, then yeah, we'll protect ourselves. We'll get into some protective puts. We'll mitigate risk. We'll do what we need to do until the SPY pulls back down to, the 140, 150, and then we'll buy the dip. And then likely from there, that's the extent of the bearish move that I could see happening. Crazy thing is, that's almost a 50% pullback. Even though that looks beautiful and it's kind of healthy, that's still only 50%. So something to keep in mind, just kind of a longer term perspective, not here to scare anyone. I'm not a doom and gloom kind of trader, although my numbers and my subscribers would be much higher if I was the perma bear doom and gloom, because that's just what gets people's attention. But ladies and gentlemen, here's what I can say. Our mission at Real Life Trading is to enrich lives. I hope that happened today in this video. Thank you so much for watching. There'll be another video on Friday, 3 days a week, every week. You guys are rocking. Until next time, remember, love life, live life, and trade it. Bye.